Thank you, everybody. It's a pleasure to be here. And my name is Borys. I am co-founder at Stobox, and our principal focus is bringing real-world assets such as equity, debt, real estate onto blockchain to facilitate investment and facilitate trading. And our common understanding of asset tokenization usually is quite narrow. The main use case people think about when they think about tokenization is something like you issue shares, you convert those shares into tokens, you sell them to raise capital and invest into project, and you list those tokens into an exchange. And the goal of this speech is to spark a bit of creativity and show what other opportunities exist, the breadth of what you can do with security tokens and tokenized assets, and how you can apply them in very different kinds of fields and to create different kinds of value. So firstly, in this picture, I will list several different kinds of such applications. So firstly, let's speak about application that you get when you list tokenized securities in automated market making protocols such as units for example, to create liquidity pools. What is important that the primary benefit of asset tokenization is that private securities become tradable. There is majority of assets in the world, majority of securities are private, non-tradable securities, the 99.96% of all securities in the world. And the reason why common standard scheme in the way you create liquidity for security doesn't work is that listing on the exchange for tokenized securities requires you to become the public company. But the reason why private companies have remained private in the first place is because they cannot afford the registration of becoming a public company. This is why you get, this is why the standard way of creating liquidity that is listed on exchanges like Archex or NX doesn't solve the liquidity problem of private assets and tokenized securities. The alternative way in which you solve this problem is why I create liquidity pools in these IMM protocols. The reason why it solves the problem is because you can still remain a private company while your shares are traded via on the decentralized exchange. And therefore, you don't go through the entire process of registration through the complexity, but you still get the benefit of liquidity and the higher interest of investors in your private company. So this is one of the primary benefits of that. So this is a way to enhance the liquidity of private tokenized securities via such protocols. But there are other creative stuff that you can do with them. For example, many people invest not in a single security, but in multiple securities in the single sector. For example, you can invest, if you invest in the sector of Uberization, you can invest both in Uber and you invest in Lyft. And if you want to get an additional income on those tokens, you can, for example, create a liquidity pool by putting into them that the Uber tokens and the Lyft tokens. In such a way, you get the benefit of the benefit of profit from the liquidity pool when those assets are traded on one hand, and secondly, you create the arbitrage opportunity when traders who believe that, for example, Uber is gonna rise and Lyft is gonna fall down can use this pool to create this trading. While in the current world, you get Apple shares or Uber shares traded only against euro, dollars, and other assets, and trading Uber shares against Lyft shares directly is impossible or complicated. In the AMM world, you can create such a trading pair and expand the space of trading pairs vastly. The next important use cases are created when you can utilize security tokens as collateral in lending protocols. What is important is that often security is that you don't want to sell your tokens because you still want to benefit from capital appreciation or from dividends, but you need to get the actual liquidity and cash. So what you can do, you can put your tokens as a collateral into the lending protocols and get cash that you can later use for your day-to-day purposes. But this is only a basic. This is a basic application that further enhances the liquidity of private securities. Because usually, if I invest, for example, in an equity crowdfunding campaign, there is no way in which I can get my cash back. While if I can put my tokens as a collateral, this is one of the ways in which I can still use this cash. And this not only provides for me the opportunity to get liquidity, but also provides me with a chance to enhance the return on that investment. For example, I can invest in security tokens, I can put those tokens as a collateral in the lending protocols to get some USDT, and I can invest this USDT again, and therefore get additional returns on this new investment. So for more sophisticated investors, such lending protocols provide additional opportunity to enhance their return on investment. But even more importantly, lending protocols and the possibility to utilize tokenized assets as collateral create opportunity for the repo market, the so-called repurchase market, to be created in the tokenization world. In classical markets, trillions of dollars are traded overnight in the so-called repurchase transactions, when custodians and brokers who own securities pledge those securities as a collateral against cash that they utilize in the day-to-day operations and that they pay back the next day after. And currently, this market exists only with public securities, which represent only 0.04% of all securities in the world. But when you utilize tokenized securities in these lending protocols, you can create the repo market in tokenized securities as well, and therefore expand the traditional markets on top into dozen times, because they can utilize now private securities in repurchase transactions as well. But you can get even more funny stuff if you utilize lending protocols not to utilize security tokens as collateral, but to borrow security tokens. What it makes possible? Firstly, it gives you opportunity for more complex trading strategies. For example, primarily it opens the way to short selling of tokenized securities. Notice that currently you cannot short sell a tokenized securities, because in order to do it, you need to borrow the security. And lending protocols create an opportunity to borrow tokenized securities and therefore to enable short selling. Why it matters? Because it increases the potential of possible trading strategies, and then increases the institutional interest in security tokens. Why? Because institutional investors are interested in more complex trading strategies, specifically hedge funds, who often utilize short selling. So the possibility of short selling unlocks additional potential and additional adoption of tokenized securities among classical institutional investors. Now let's speak about tokenized public stocks, because currently majority of asset tokenization is applied to private securities, to equity, to debt, issued by private corporations that are not listed on stock exchanges. But it is possible as well to apply tokenization to public stocks such as Apple, Tesla, etc. Why would you do it? There are multiple reasons. One is that you can fractionalize existing public shares. Even those who cost several hundreds or several thousands dollars may be overly expensive for traders in developing countries, and therefore you limit the possibility of trading of securities. And we're not even speaking about shares like Berkshire Hathaway that cost hundreds of thousands of dollars and probably aren't available even to people in this room. Therefore, you create more access to trading in public securities as well. Also, currently public markets are open only in standard trading hours, which means that securities trading on London Stock Exchange or in Nasdaq are not available on other side of the world in many developing countries. And tokenized trading of public stock creates this wider access to the community in developing countries. An interesting possibility also is that it prohibits double spend of public security, because the current public market infrastructure is very intricate, but it's also flawed. There is examples of the company called Dole Food that at the point of its default had 33% more shares owned by shareholders than the shares actually issued. So there have been, due to the complex shenanigans with brokers, extreme double spend in shares of public stocks, which you obviously avoid when you bring those public shares onto blockchain. And lastly, currently the public stocks, the common shares cannot interact with DeFi protocols, with AMM protocols, with lending protocols mentioned previously, and now you make this interaction possible via tokenizing those securities. Let's speak about a few other quite interesting use cases that you probably haven't thought of. One such possible use case is to tokenize sovereign debt. We often speak about tokenization of securities issued by corporations, but securities are also issued by governments. And currently, government securities are primarily offered to institutional investors. But what you can also do, especially as a developing country with bad credit rating, you can raise capital from public markets, from public investors by tokenizing your sovereign debt. And this is an additional opportunity for countries with unstable economical situation to raise capital from risk-hungry crypto investors. It is true that probably majority of investors, like pension funds, institutional investors, are quite conservative. And for governments of developing countries, it may be complex to raise capital from those countries, but it should be possible to raise capital from the crypto community by offering sufficiently lucrative returns by those governments. Other interesting opportunity is to tokenize shareholder agreements. Notice that shares are not only about the profit rights of investors. Usually, when you invest in private corporations, the rules of those investments are much more complex. They also include things like, for example, drag-along provisions, the tag-along provision, the liquidation preference, which investors get liquidation for first. The things like, for example, before selling your stocks to third-party investors, you first need to offer it to existing investors, the so-called preemptive rights. And currently, there is a lot of opportunities for fraud by not abiding to those rules. If you tokenize shareholders' agreement, that is, you embed into a token those rules for shareholder agreements for private shares, you can avoid this fraud altogether by making it technically impossible. So tokenization of private shares in private corporations can be used not only for fundraising, not only for creating liquidity, but also for avoiding fraud by embedding the rules of shareholder agreements into security tokens. Another interesting opportunity is the way in which you market tokenized securities. So you do not necessarily market them to crypto investors as an alternative, more safe asset class. My personal view is that if you want to achieve a true adoption for tokenized securities and for crypto assets, we need to target mainstream investors. And one of the ways to do it, specifically with tokenized real estate, which is the most popular asset class at all to be tokenized, is to offer them to mainstream investors as an alternative to current safe investments. Notice that currently bank deposits offer ridiculous yield. They offer you like often negative yield or a yield lower than 1%, which means that many investors are looking for alternative opportunities. Some of those opportunities can be found on public markets, but even corporate bonds or public bond can offer not very high returns, like 3% or 4%. With tokenized properties, you often can offer returns such as 6%, 8%, or even more, which means but on the level of risk, there is still at least perceived as a very low-risk asset class, which continuously rises in value only with very short-term fluctuations. What it means is that you can market tokenized real estate to mainstream investors as an alternative to bad saving opportunities they have now. And therefore, you get much larger market for tokenized real estate and greater opportunity to raise cash for tokenized real estate. Another thing to think about is the fact, after the end of the speech, another thing that you can think about is that you can utilize tokenization to sell your company, and not only to raise capital to develop existing company, but also to sell the shares that you own as an owner, as a founder of a company to make an exit. Instead of selling it to a single investor or to a single private equity fund, you can sell it to the community of investors. Why would you do it? Because if you sell it to the community of investors, you can sell it at the higher valuation. Why? Firstly, you have a higher relative bargaining power because you get a larger pool of investors. Secondly, due to the liquidity premium, assets that are traded usually have higher value, which means that you can get more profit by selling your company if you do it using tokenization and sell it to community compared to selling it to a private equity fund or a single investor. Other interesting opportunity to tokenize, other interesting asset to tokenize is not only things like shares or bonds, but also things like carbon credits, for example. We often received interest from several issuers to tokenize carbon credits that they receive due to their social responsibility, due to their corporate social responsibility, replanting of trees, etc. And this is another site, and except for your common activities that you do, you can issue additional token that represent those carbon credits and make them more tradable and sell those carbon credits to the community. Lastly, and very interesting use case is to tokenize people or specific contracts with people. There is a case of a software developer from Russia who raised, as far as I remember, $20,000 in tokens that he used to relocate to the US, which drastically increased his income due to this relocation only and getting a higher job. And then he paid to his to the token holders the share of the new income, increased income that he received. And there is lots of opportunities for people to increase their income by getting investment first. For example, by using the capital raised in this token offering to get an education, to move to other country, and thousand other things that people can do to invest in themselves. And you can not only offer tokens that represent your business, but tokens that allow investors to invest in yourself for you to develop your income and then pay back to your token holders. So this is another great opportunity that that is not only good from the financial perspective for investors, but also good from a social perspective, because it creates much more opportunity for people who can deliver more economic value and escape from poverty to do it by getting this investment. So overall, there are lots of opportunities in asset tokenization, creative applications of security tokens that make it more interesting for investors, but also creative opportunities for issuers and asset classes that can be tokenized. So I want, by this speech, to inspire you to think about all the interesting creative stuff you can do with asset tokenization, to inspire you to be creative and bold in your business opportunities. And if you would like to tokenize any kinds of asset, I encourage you to reach out to Stobox by info@stobox.io or directly to me, Borys Pikalov, in LinkedIn, in Telegram, and discuss how we can assist you with tokenizing your creative class of assets. Thank you for attention.